Good morning. All right, so yesterday we got a rejection of this move up, and what I titled YouTube was reversals or turns here. They can tend to be a bit treacherous trading them intraday, and they can whip up and down because buyers are not going to give it up so easy, and sellers coming in, they push it, and it takes a little time, and that's what retest patterns are about. So we don't have any kind of retest pattern yet. We got that reversal day yesterday. We'll see if it follows through. We do have to respect this initial move up, the size of it. And so a few concepts going on here that suggest to us that the market should be at a turning point, and things that we use to guide us as part of what we call MTS. And one of them is that prices often reverse after a greater than 100% retracement. And this is one of the things that I wrote about in the newsletter, looking for a turn to happen after this high was taken out. So now that that's happened, okay, that's one concept. Then of course we look to the left, and the other thing is we see that topping tail there. So a topping tail. And this one got that little congestion area on the daily chart. They don't always have something directly to the left like that, where it forms a larger area of congestion. But whenever you see a topping tail on a higher time frame, there's going to be a pivot or a turning point in a lower time frame. So that's one guidance. So we know that there's an area of resistance there. And the fact that it took out this high suggests to us that it should begin to stall. Now, how the turn happens, if the turn happens, that's, we're just setting up our bias, our expectations that a turn should happen. Now we actually see, do we get confirmation of that? So yesterday was some initial confirmation. Then, of course, we have to break a prior day's low. And, of course, then we, look at bar by bar and pivot. So there's quite a significant support area down here. So however this turn happens, I have no expectation that the market is going to collapse. It'll take some time. And one of the ideas or concepts, as we use the word concepts, is that turns often happen, some kind of turn often happens around the middle of the month. And so now, as markets have advanced into August, and the idea of September being the worst month of the year, sometimes, price. I've seen times where markets have gone down into August, and September wasn't the worst month of the year, and prices bottomed in August. But this year, we have prices advancing into the middle of August, coming into an area of resistance, and now we got to look for some kind of consolidation or chop. So, I think we're at a point here, not that this has been the easiest, environment. There was a lot of chop, and then the momentum picked up here, and then there was chop, and then, prices went up. So I think we're in for a period of some chop going on here at this. And one of the things that really the chop is beneficial for is that if prices were to decline right from here, they're not going to go very far unless there's some news item that would just drive markets lower. And I don't see that we have that. So the benefit of the chop, should it happen, is that it moves prices over time away from the support point. And so if prices do chop around here for a week or two, going sideways, moving away from there, the idea is there is a greater potential or ability to get through that area. So we'll see how this evolves over the coming week or two. So right now you can see prices are up here a bit, just inside day within that topping tail bar. So just running in place, going nowhere for the moment. Interesting. Your ES looks so different than spiders because of the gap. They always look different, Dan, because it's a 24-hour chart. And, I've always found the differences between the two trading intraday. Um, well, because this rallied, overnight. So you've got a wide range bar versus what we have on the spiders, where there's been gaps. But, the intraday patterns will often look different because of the gaps. And one of the things that you find is that the differences between the intraday patterns, you usually don't get strong moves until the two of them line up, and you have those that are looking at what I call a day chart, without the 24-hour chart, and those that are looking at 24-hour charts, where those trends begin to line up, and then you've got, more traders, institutions aligned the same within that. So it can be confusing when they're not lined up, and you got to know where the unfilled gap is, the overnight trend early first thing in the morning. So it could, when they're not lined up, it can make for a difficult trading environment until they do. 41.75. I've got 42.75, 42.80. So we're on the same page there on the upside. And I'm not so comfortable with the downside because it's pretty close. Let's go to spiders here. And so, you see the gap up and then the other gap. And yesterday, I titled YouTube about this gap being high risk, and we see what happened there. So we got a reversal day. And then again, in an area of resistance, the same greater than 100% retracement at the topping tail, of course, and all of that. And the same congestion and unfilled gaps and so on. So, well, so, and that very well may provide the support that doing a put spread under that level. Well, those in YouTube, McGraw's telling me that 4,200 it's got a lot of open interest there, which tends to act as a reference point of support. So you've got yesterday's low, right, of 42.01. Now it's right there. There's an inside day. Breaking yesterday's low, if selling should pick up, it's going to be a big deal. So 41.70 coming down here, I think is, based on this pattern, is certainly in the realm of possibilities, for a down day, which wouldn't do much to damage this chart. So we always look for areas where, that would be excessive. That would be an excessive move. It would be a wide range move. And to go from, this 42, 01, 4,200 to go down 30 points on the S&P, I mean, you can see where my cursor is, and look at where 41.70 is on the hourly chart. There's nothing there. There's nothing there. Now you might look at this, okay, and you say, okay, there's this minor support, but it's been used over here, right? So when this gapped up that day, prices chopped around over here. So look, you got a reversal bar there. You got this rejection, and we have to assume the possibility that the 4,200 breaks, it's right there, regardless of the open interest. And then to get to 41.70, it's kind of like a bunt. And so that's not within my comfort level, especially where there's an unfilled gap there. Whereas the upside, that far away, it's more along the lines where I think, makes sense to be safe. All right. So, and then take the trip around other places, markets. What are they doing? And so we see the same rejection in the Qs, and it's up there, with that resistance area. Totally makes sense. QQQ, we've got a relatively large red bar. And a red bar or a red candlestick sometimes can be meaningless, right? What's the location of that? And what is the trend? And how long has the trend been going on? All of those things coming together increase the potency of a red bar. Whereas, a red bar in the middle of nowhere is like, okay, that should be a red bar ignored. Whereas this red bar is something where it may not collapse here. It's got this congestion there, but it's unlikely that it's going to be a red bar ignored. And so things are up here a little bit, inside day. Um, nothing going on here. For the moment, it's not breaking the low. You see it perking up there a little bit. And it could be one of those situations. It's going up because it ain't going down. So shorts cover a little bit. How far does it get? 326. It's in the middle of the red bar, so no big deal at all, and leads more to the idea of, hey, you could chop around here for a few days. Inside day today, maybe it does nothing, and maybe that downside would be okay for that put spread. But breaking yesterday's low, if that should happen, doesn't leave much. Well, leaves virtually nothing, for stopping things to go down. All right. And YM, that still got some room to go up. Inside day, again, pointing to this support level where this broke out. So, coming down toward this area here of minor support is something that should never happen with a pattern like this. Because this is a consolidation, a resting period. Here was a nice wide range red bar being ignored, a bullish 180 followed by a bottoming tail bar. So all of that bullish price action, that resistance, we spoke about this back then. And so now it breaks out. So if this immediately begins to fail and momentum is slowing down immediately after breaking out, right, that should not result moving back down into this area. So, and we'll just see, how this unfolds and what it does. You've got yesterday's low as support, as always, but look, yesterday's low, the intraday structure of the pattern, when we look at a daily pattern, doesn't have to look like this. And it could be like just a pivot and nothing, whereas you got a larger area of support there because of that sideways. So breaking here leads to the next concept of a wide range bar is the weakest link in the chart because it's a momentum move. And so going sideways, and here's the idea of going sideways and building an area of what could be, it could be a launching pad up, but it could be a congestion part that becomes a large area of supply. And that supply, right, going into an area where there's little to no demand will drive this all the way back down into that base. Again, we'll see how it unfolds today and going into next week. So Russell had this big move. It's up into this resistance. So pretty much the same thing we see everywhere. So you're saying calls have been bought out and time is up. All right. So, what are they going to do? Salvage whatever money they have left, take their money. I mean, if calls have been bought up at higher levels, odds are, well, they're going to lose their money. Right. So as traders buy out of the money inexpensive calls, looking for them that they're going to get in the money, and then for next week, I get you. Oh, Bitcoin, interesting. We talked about the fact that it really didn't participate much here, and but these pivots, what are they going to do? So if this starts to roll over, and what I just talked about comes into fruition, where things go sideways and begin to roll over, I think, the Bitcoin buyers have to throw in the towel and say, you know what, just like any other pattern that is bottoming, where it's like, okay, this had the potential to run up and it didn't. Let me just regroup, sell, and, not take the risk of some downdraft, and if it reverses, you can get back in again. But at this point, the pullback to support, it moved up in a nice momentum way, and it's the momentum is stalled here doing nothing. So the spring is being wound. I'm not saying it can't go up. I'm just saying that if I was long this with this kind of pattern, I'd be getting a little nervous that it didn't participate already. So be aware. When I say the spring is getting wound, what it really means is, the pivot highs, the sellers, and the pivot lows, the buyers are getting closer and closer together. And odds are it's reaching an inflection point as to which way it's going to break. Crude, I'm kind of thinking this is down so much this is part of a bottoming process, but we'll see. Early in the week, I said maybe this could develop into a breakdown bar failure on the weekly chart, which is a wide range bar breaking down under 2 or 3 lows like that, and then you get an inside bar. So what we're going to watch for next week is if this week's high gets taken out, just right here. This could be sideways. So if it does, I see the chop up here, but it's a pattern that sets up the unexpected, meaning it's been trending down, it breaks below support, and then it stalls and goes nowhere. That is going to create some short covering. Now, how does this information fit in with the idea of the market maybe at a high point? Well, this whole thing of, hey, inflation is topped out and oil's come down and all that, and oil starts to rally back up, and maybe it gets above $100, which wouldn't be a big deal. Then stalks the inflation fears, and there is, I can't remember the symbol right now, but some of the ag ETFs started moving higher this week. So you might want to take a look at that. And if we get ag start moving up again, and oil starts moving up again, and we just look for all of these things that begin to come in alignment to solidify our bias. Or if they don't, it's like, hey, it ain't happening right now. So we make adjustments, and so at turning points, things tend to be a little treacherous. Someone's asking me, is Bitcoin the major crypto, or we have watched others in years? Ethereum get much attention by crypto cult? Well, I think those are the two main ones. Bitcoin is always going to be the main one, and but there's been recently this news about hackers breaking into these wallets, banks, and stealing people's money. I would be pretty hesitant, or maybe getting my money out, or thinking about, millions of dollars being lost. That's pretty crazy. It's still something relatively new, and I guess new security measures and all of that are still in the process of happening. Silver not doing much of anything here. Maybe it's bottomed, and gold's, kind of dead in the water. But, this dollar popping up here a little bit again, that is not going to help metals. And so, this has kind of worked its way down toward this support level, where major support is still down here. So this could be a turning point. So as we talk about intermarket relationships, if oil starts to move up, ags start to move up, the dollar starts to move back up here, the market's going to have a problem. So again, we'll just see how this all unfolds, and we'll see, obviously, what happens today. Think it over, Dan.
Good morning. Happy 0 DTE day. I posted a little note thing saying, I mean, I mean, it's no surprise. Greg and I want to pull back. This is not a great continuation pattern at all. That's why I've been lightening the bullish exposure into strength. But now with the gap up here, middle of the range, I think it's going to be a boring day with the gap up. So let's look for credit spreads. But with the volatility under 20, it's going to be hard getting attractive juice. So maybe even condors. We'll have to go to our usual suspects. Condor, Tesla, 895. I don't know. Let's play them by ear. Greg mentioned a couple here to me. Zoom, let's see the 115s. Amazon has been the best topping pattern of the fangs. Roku's been weak. We looked at Roku for next week. There was nothing at the 90 level. So those are a few. Yeah, aluminum, of course, that's on my list. Last night it was gapping down closer to 180. And when I trade these huge massive gaps, the bigger the better. So now that this is only at 200, yes, it's still a watch, no doubt. But I liked it better at 180 because the rubber bands even scrapped more. And that's beyond that we were looking at yesterday. Nice cap up here with a price void. So let's keep an eye on this for a 0 DTE. The daily's still fine in terms of retracement, but that big tail should not have done that. So I'm in two different strikes myself. I think 31, 32 for next week naked. But I'm not recommending a 7 DTE, just 0 DTE. What else? I only did 1 0 DTE last night into earnings. Where are you? So these are post-market. This is post-market. So I did Riven. Somebody in the green room mentioned it, and I joined them. I did the 32s. When I do some of these that don't have a recognizable pattern, I kind of the 50 MA I like. Now I know the 50's at 31, but there wasn't enough juice there, so that should expire at full profit. These are some other. So yeah, there's aluminum. These are all earnings right here. RMD, nothing. WPM, nothing. So I'll just start deleting my list here. But unfortunately, through earnings season, I've been posting a huge list of credit spreads pre-market. And today I got nothing almost. I mean, that's a bullish gap up, but I mean, that's a beautiful bottoming pattern on the weekly. I'm adding this to my core watch, but same problem as so many. How the heck are you going to get on board the daily? PWP. It's slight volume. Look at the overlapping. I can't tell where it's gapping, Thomas. So I'm not sure what strategy you're looking at. EDR gapping up, coming in. I don't know. So I'm not going to be aggressive here today. Flow, okay, so that's gapping up over yesterday's high, a tail. So that could be a day trade or put spread. I'll put that in the bottom right here. I have aluminum on the other screen. I'm Ryan. No pattern. Oh, I did. These oil ETFs are kind of neutral to down a little bit, but look at in terms of a new trade. I like OIH put spread. Stop under the week's low right there. Payo, a nice gap up. Gap's too big for me. Olo getting whacked. $9. Wow. I mean, you can watch it and see if it bounces, but that's some pain right there. Legal Zoom, gap's too big. Now, just hypothetically, if this were gapping up to $12, then that would be a tier 1 gap, gapping over a red bar with a price void. But now there's no price void. So I'm just going to delete you. Joby, maybe 30-minute high, maybe. Maybe it's a buy setup with a tail gapping inside day. It's a maybe. I'll put that in a window. So maybe is, I don't know. I got to come back to you. VIAB. I just see one print there, so I'm not sure. Vert. Yeah, that's a much better pattern than PWP. That's bullish time consolidation. I can't see a gap though, unless I lost my gap. No, I got my gaps. Rocket Lab. I mean, it's bullish pre-market, but there's no pattern on the daily. I just don't trade these. Forge gapping down under 20. Support. I don't know what that's going to do. I can't tell a gap, but it's rolled over. So as long as it doesn't gap up, that's a call spread idea. 21 and change, big gap to support. Law getting killed here. Wow, look at that. When it's off your entire daily chart. Wow, that's pain. All right, so these now are pre-market. SPB, I see a couple prints. That's a nasty gap. All right, that's nasty. We'll see how that sets up. PCT, it's a bullish, but it's up 20 days. I don't know what to do with that. Errors, it's gapping over a red bar, but look how far it is from the 20. Huma bottoming pattern, maybe it's a 1, 2, 3. Today, that's today's earnings, or after, or this morning, whatever. But that's an igniting bar, so people were very, very bullish into earnings on that. All right, this is Hunt's. Oh, this is the little honest company. This is my girl, Jessica Alba. Not a very successful IPO for her. No pattern, don't like the way it trades. Codex, nasty gap, man. All right, OIH, I had posted over yesterday's high. So that one little print up there where I saw the gap up was not real. So it's good to go over yesterday's high. Put spread 241.33. Selling at the open here. TGL recent IPO. I don't know what they do, but I'll keep an eye on it. David mentioned this ULCC. It's kind of in a coma. It's David. It's kind of acting like a buyout. The way it's so tight. See, there's some news on China. 5 stocks got delisted. Well, that's not the correct description. They are leaving the exchange of New York in America because they don't want to deal with our requirements. All right, so aluminum. Yeah, this would have been a good trade, David. It just didn't set up. I would prefer to bounce from 180. Hey, if you're bullish on it, the 190s or 60 by 90. If you think that ain't bad at all. The 190s, 60 by 80. I'm gonna do one lot. 190s. All right, I'm in. Now, I don't recommend anybody else do it unless it comes back and gives a higher low. But the 190s are under the pre-market right there. All right, so some of these Chinese stocks, so I'm going to look at K-Web. There's no pattern and it's holding, so I don't really see anything there. Posh, no pattern. Baba, no pattern. But you know what? Since there's bad news, if these things take out a 30-minute high, then there's zero DTE put spread ideas. All right, beyond it. So if beyond, I wouldn't touch unless it takes out the pre-market high. So like eyeball and 37.50, I'll go ahead and set an alarm there. Markets are sputtering here. Diamonds holding up the best. The only red in the diamonds is CVX oil. Everything else solid green. All right, 37.50. But beyond, yeah, beyond something's wrong with that.